I'm Emma Joyce. I'm the CEO of GBBC Digital Finance. It's my absolute pleasure to be here with you today. We're going to be talking about creating new networks of value. We'll be looking at the challenges preventing more meaningful adoption. We're going to take a quick look at regulation. I know we've got a regulation panel coming up later in the week. We're also going to be asking if the financial sector is ready to embrace a new model. We've got 40 minutes today. It will go pretty quickly. We will have time at the end for a few questions, so do put your hands up if you have any questions. And I'm going to ask my panelists to introduce themselves, please.
Hi there, Rob Massey. I am a partner at Deloitte, and for the last 10 years have been working to lead our blockchain digital asset practice. I am tax by trade. We have 4 leaders that cut across all of our competencies, and it has been so much fun to be in this ecosystem, serving across really every segment for 10 years and watching it grow. Challenging times, great times, and a lot more rosy times ahead, I'm sure.
Thanks, Rob. And hi, I'm Tyrone Lobban. I am the head of blockchain and crypto at JP Morgan. I also run a platform that we have around tokenizing traditional assets called Onyx Digital Assets. I sit within a business unit that we have created within JPM called Onyx. This is a group of about 250 people that are focused exclusively on building new products that leverage blockchain technology. I've been in the space since about 2015, first time at Davos, so thank you so much to the GBBC team and GDF for having me.
Yuval, I'm the co-founder and CEO of Digital Asset. I started the company in 2014. Really been focusing on creating technology products that will help customers, primarily in financial services, but now also in insurance, healthcare, and sports wagering, using this technology to tokenize assets. But we'll talk about other use cases that we're working on with our customers.
Wonderful, thank you. Yuval, I'm going to stick with you. Would you mind, when we're talking about digital assets, would you mind explaining to everyone what do we mean?
Yeah, so this is a very personal question because I think that everybody will have their own, but I think that it was important maybe for this panel, and maybe we can hear from the other panelists. From my perspective, a digital asset is a very broad term for an asset that was born digital. It's digital front to back. It's not just that you can see the balance of that asset in a digital format, but also its entire life cycle is managed in a digital way. So cryptocurrency will be a type of a digital asset. It's a non-backed digital asset, meaning it's created by the network, but there's no real asset that is backing it. And I'm sure we will talk about many other digital assets today that are backed by some kind of a financial instrument. So to me, again, a digital asset is an umbrella term for something that is digitally native.
Could I add a couple of points just on that? I think the other interesting thing around digital assets is obviously the ownership, being able to embed ownership directly into the asset, but then also the programmability. And some of the interesting things that we've done in the past that really, I think, highlight why this idea of digital assets is really interesting is, a few years ago, we tokenized renewable energy credits, which essentially allowed us to represent, your obligations around your renewable, footprint, your carbon footprint on blockchain. And what we were able to do was directly feed into these tokens on chain the actual amount of energy coming off of the, solar panels on like the roofs of buildings. And directly within the asset, you could then see exactly what was backing that asset, right? What specific kilowatt hours were actually used to generate that asset. And that means that when you're actually transferring ownership to someone else, they have direct visibility into the validity of, and the authenticity of that specific asset. So I think this idea of programmability, embedded ownership, and more easily being able to transfer assets is something that is inherent within this idea of digital assets.
We tend to think of digital assets in many different areas, and all of which are relevant when you're going to apply a different regulatory lens. So, cryptocurrencies, some of which are store of value, some means of exchange, some with more or less utility. We also have flavors of stablecoins. Not all stablecoins created equal, right? We have CBDCs coming online. I think 19 out of the G20 now have meaningful efforts in this space. The significance there, while different than other digital asset types, hopefully programmable, right, which helps the ecosystem eventually. And then, tokenize everything at this point, isn't it? Everybody's looking, hey, is there a meaningful value proposition for us to tokenize something, fractionalize it, distribute it. And then I know we're going to talk about the financial services industry a bit, but now really, coming up with new financial instruments which have new methods of transparency or viability because of the programmability nature and, frankly, transparency, right?
Brilliant, thank you for that. I love that as an introduction to the panel. Rob, I'm going to stay with you. While there has been an upswing in adoption, what are your thoughts on the impact the extended crypto winter has had? And also, what are your broader thoughts on the events of 2022?
Yeah, it's good to get this out of the way, right? I think we look back at last year and even preceding years, right? We've seen problems. I think we've seen in patterns is that less failures in technology, more of questions about business models, and frankly, risk and controls. And the reaction, at least in our client base, is, there's a segment of our base that says, okay, we need to reprioritize our risk and control frameworks and make sure that is absolutely buttoned up top notch, and not just looking at normal economic factors, but really push the envelope. What happens if something extraordinary happens, the unthinkable? What happens then? The other segment says, thank goodness we prioritized it, right? We're on the right track. Great investment, right? We're now ahead of everybody. And so I think that, from my perspective, that's the biggest outcome.
Yeah, when I look back on 22, I think the overarching sort of memory that most people have is obviously the last quarter of the year. And that's been, incredibly colored by everything around FTX and obviously all of the collapses in the crypto industry generally. And so I think what that has led to clearly is lack of confidence potentially, and also a credibility hit, unfortunately, to the crypto industry, and perhaps even broader than that into the blockchain, and digital asset space. But I think it's important also to not forget that there were lots of very positive things that happened in 22. Starting with the Ethereum merge. That was something that's been on the roadmap for many, many years. Finally actually happened. It was basically a non-event, which is incredible given the complexity of it. And I think that at the time was something that I took a lot of confidence from, and I was able to share internally with the senior leaders across the bank around why blockchain technology and the idea of having decentralized infrastructure that can be coordinated is actually really powerful and can be absolutely used as a settlement rail. Then you have things like incredible projects where large asset managers were tokenizing parts of their funds. Apollo and KKR both executed projects where they were moving parts of their in a very small way, but actually stepping into the idea of tokenizing parts of their funds. We also had progress in NFTs, Coca-Cola, Starbucks, Nike with the launch of Swoosh. Lots of progress, and really brands actually still embracing the idea of leveraging digital assets and NFTs specifically for creating new business models and creating new ways of engaging. On the JPM side, we were able to take our first steps into the public blockchain ecosystem through Project Guardian with the Monetary Authority of Singapore. That was us executing a live transaction, real value transfer on public blockchain using DeFi protocols. Like, this is, a few years ago is unheard of. So I think whilst there is a lot of negativity, and I'm personally, still very hurt by everything that happened because it has set us back, no one can stand here and say that this hasn't impacted us, because certainly from a regulatory perspective, there is rightly more scrutiny. I think regulators have always been very cautious around the space in general, but now they have, perhaps more ammunition to say this is why we should be more, directly involved. But I think that if you look at those positives, there is definitely a path forward and a way for us to get through this hopeful, temporary dark cloud.
I think everything was said is really important, but maybe to kind of continue what Tyrone just said, I think that when you have boom years, it's great because a lot of money gets invested into industries, but there's also a downside to these boom years because there's a lot of noise, right? And actually having the noise to signal ratio is really large. And if you look at if you talk, so from my personal experience talking to a bunch of CEOs, both in the space or even outside of this space, what you're seeing is that just global trends And with regards to this space, what they are doing is anything that doesn't have a real ROE is canceled, right? So I think that there's a lot of things that got pushed back as a result of everything that happened. But I also think that what you will get out of this situation is that projects that have real ROE, real tangible value, will actually continue to excel. So Tyrone mentioned a bunch of projects. Goldman just issued a bond in January. You will see a bunch of others. We're working with at least 4 dealers on tokenization platforms. We're working with 5 asset managers on tokenizing assets. And again, I think that for me, any project that didn't have a real impact on the day it launches is now being canceled. And to me, that's a good thing, by the way. That's not a bad thing, because we all know that over the last few years, there have been too many POCs. And the challenge with POCs is you can lose a lot of trust by your stakeholders, because they're saying, why did we spend this money and effort and opportunity costs of people just working on these projects where we can generate a real business? So for us, end of last year, Deutsche Börse launched their CSD for issuing digital assets with structured products. These are structured products that at peak volumes can have 30,000 new issuances a day, and they're now issuing every day. And the number, I think the time that they quote is 3 to 6 day issuance, is now down to less than 10 minutes. Goldman said that their bond issuance is real time. And we're going to see more and more of these things. So to me, there's of course bad news, and that's not good for the industry, but I think it also elevates the projects that have real ROE for the clients.
Absolutely, I completely agree with that, and thank you, for reminding us of all the important milestones and wonderful things that did happen last year, because I think they can get a little bit overshadowed by the last few months. Tyrone, what are the challenges that are preventing more meaningful adoption, do you think?
Well, I mean, unfortunately, as I was saying, right now, I think there is going to be a regulatory backlash that is going to impact the pace at which some projects are rolled out. We're all deep in blockchain. I think most of us are, have been working in this for a number of years. And the nuances about this technology are, often clear to us, but from the outside, they're very confusing. And actually, even sometimes inside, when you're in the industry, they're confusing because it moves so quickly. And if you are a regulator in charge and responsible for ensuring financial stability and investor protections and ensuring that the global banking industry is not at risk, you're going to be cautious about how this technology is rolled out, and it's not always clear where the lines are between what has happened recently in the crypto lending markets versus what's happening in traditional finance using blockchain technology. And so I think that what we're going to see, and certainly from the JP Morgan perspective, is a continuation of the execution on the strategy. We're not changing, for example, anything about what we're focusing on, but the timeline, I think, is going to be more extended than what it has been. And, that's it's sort of unfortunate in terms of, obviously, we're all here to get things out into the world and to create something new and add value, as Yuval was saying. But hopefully, one upshot of the extended regulatory engagement is that we can make things clearer so that in future it actually becomes quicker to roll out these products and more obvious to the regulators as to what the benefits are. So I think one is just regulatory engagement and continued education around that. Again, picking up on Yuval's point, commercials is really important, right? We have a business now focused exclusively on blockchain within JP Morgan. That means that there are going to be commercial targets and revenue targets, and at some point projects are just not going to cut it if they don't actually, if you don't realize those benefits. And so we and others have a high focus on making sure that we're really tackling real problems, and that those real problems actually generate value. And the great thing is, the thing that I'm most excited about, is that from my view, the quality of projects has actually just gone up over the past 12 months. The use cases that we're seeing blockchain actually be applicable for are so rich and so exciting and interesting that I'm not so concerned about, like, is blockchain going to make it and is it the right technology? I'm absolutely convinced that some of the products that we're creating and that others in the industry are creating are uniquely enabled by blockchain. But we just have to recognize that it's going to take us some time to actually get those things to market and to scale.
I mean, I have to add on, regulatory absolutely is the biggest thing, right? And it's such a broad range of considerations. I mean, I think top of mind for everybody is like securities laws and money transmission. But remember, I'm a tax person, right? So tax and accounting, very, very near and dear to my heart. And we are the first people now at the table when we're designing new business models. That has never happened. I'm never on the front end of a transaction. But I like that that's where people think, right? It's got to be in the design framework because it is so hard to replumb the house later. So bringing in the bean counters early, I think, is really good. And that's going to continue to be the case because we're not going to have clarity on all these different topics for a very long time. So this just means lots of iteration, making sure that the models are designed appropriately.
Yeah, and I'm just generally optimistic about this because I keep on reminding people when you talk to IT consulting firms, they will still talk about cloud migration. These things just take a long time. So when we're talking about just moving compute to the cloud is challenging, imagine what it means to move your entire critical systems of record and actually managing assets in a whole different way. It takes time, but you do have pioneers in the industry, as Tyrone and his team, what Deloitte is doing, and many others, not just ourselves, but you're going to see more of these use cases. And you're going to see what Project Guardian does, what Goldman does, what Deutsche Börse does, and that will just give confidence. I do think that educating the regulator and providing resources to them, not explicitly but implicitly, is extremely critical because at the end of the day, we all know that technology moves at a much faster pace than they have the resources to catch up. And this, by the way, is why, to me, what GBBC, why we joined, why I'm on the board, is because these are the type of resources that are just so critical to keep that education implicitly.
And can we stay with that for a moment? I mean, is it all about education to regulators? Because given the events of 2022, I think, policymakers, regulators are under a lot of pressure to, react. And how do we balance regulation with innovation going forward in a sensible way?
I do think it's education because, I think that, every industry, we can even take AI, will have bad actors. They will. It's just not, right? And we can take probably every industry, every tech innovation that have taken place, and you will be able to point to bad actors. The risk, as Tyrone alluded, or is right, is that you suddenly have a bad actor and suddenly it casts a shadow over an entire industry. So I do think that the education is important, and I do think that creating, for example, the sandbox in Europe, for me, is a great example. And I do think that an industry could create these type of environments, which to me is part of the education. So maybe to me it's not just white papers and meetings where we explain what is a blockchain or what is a smart contract, but it's also coming up with proposals like a sandbox or even technical environments that are allowing regulators to see that there's the good, right? And there's going to always be the bad, right? But to me, the risk for the industry is that you take one really bad actor who's done really bad things, and now suddenly everybody's in that category.
What I'd add is, so when I think about balancing innovation, regulation, progress, look, the first thing is, I am a fundamental believer in the idea of innovate or die. Like, I think every industry has to innovate. We're all here to try and create the net new. It's just completely, you must do it. Otherwise, you're going to be left behind and, your business model is going to become outdated. So the first thing is to have an innovation mindset. But the second thing is to make that innovation happen in a controlled way that you can take small steps forward. You can show why it makes sense to do this thing, and you can get people comfortable with that small step. And then that will, breed confidence. It will raise questions. It'll allow you to think more deeply about things, and then actually move forward. And, I spoke a little bit about Project Guardian, but just to, shed some more light on that, So this was a project that we did whereby we were going to essentially swap tokenized Japanese yen for tokenized Singapore dollars using a DeFi protocol on a public blockchain. And those words sort of like roll out very easily, but when you're a regulator, none of that makes any sense. And so we had to spend a lot of time, and we were actually forced, as I was saying, to think more deeply about what are the controls that we can put in place that if something goes wrong, we can show our regulators, look, here's how we can work around any issues, or here's how we can mitigate a problem that comes up. And not only did it actually make our product better, it made the regulators comfortable with our thought process, and it actually made them comfortable with us doing the project in the first place. And so I think if you go in with the idea of I'm going to push the boundary and I'm going to innovate, but I'm not going to alienate people along the way, then you can actually make progress. I think if you go in all guns blazing without regard for what the sort of established process and way of doing things is, you do actually end up putting people's backs up and you don't get their support, and that's one way to not progress.
Echoing on what you said, you used the phrase to the regulators, here's how we deal with a problem. Here's how we mitigate a problem. Notice, I didn't hear you say, this is how we deal with this rule, right? Many of us spend all this time trying to fit really innovative new concepts into existing rules, and that's fine. But if something is so impactfully transformative among commercial activities globally, pick an industry, pick a geography, it's time to pause and say, what are the problems that the regulations are meant to mitigate against? And what do we do to prevent those things from happening? Versus trying to fit everything into the rules. So I think the way you framed that, I think, is a very healthy approach and just good for the industry.
Thank you all. Yuval, what needs to happen for market participants to unlock commercial potential?
So I get asked that question by customers, right? What should we be doing? And I try to remove blockchain out of my answer, because at the end of the day, I think about what we do as solving business problems. So before blockchain existed, I used to be a quant at Citadel and then was a trader at a trading company. And when we would ask for budget, my boss would say, well, explain to me how you're going to make money from that money that I'm going to give you. And explain to me what are the risks that are associated with that project. And I would have to make a case for it. And I don't think that that's any different. And I think that, if anything, for the first few years, as everybody was building the technology, we used to have a joke internally. We would call it blockchain tourism, right? So because there was a lot of excitement, boards and management teams told their teams, you have to find a use case. So what would they do? They would just say, let's just put this on blockchain and it will be better. But they didn't really actually think about, well, what is the problem that they're trying to solve? And really at the end ask, well, is blockchain the right tool for this problem? So we always tell customers, and by the way, sometimes we do it using pricing, is we put a price in front of them and we said, can you actually pay this price to do this project? And that's usually a very good detector. Is there a real problem to solve? Because very quickly, the ones that don't have a real problem go away, which is a good thing for them and for us. So I keep on coming back for participants is really to ask, what are you trying to solve? And sometimes it's not problems. There's also revenue opportunities. So for us, we're working with an insurance company that it's one of the top 10 insurance companies in the US that are putting their entire admin platform on blockchain and smart contracts. Everything, front to back, all the way from issuance to the customer to the admin, carrier, underwriter, everything is going to be managed. First step for them, they think that they're going to reduce their OPEX. But they're actually thinking one step forward, which is how can we start managing moving risk much more efficiently. So today, moving risk to a reinsurer is anywhere from 9 months to a 1.5 year process. So they're thinking about, well, we also have a revenue opportunity. But we actually had to work with them for quite a long time to build a real business case that it's not risk-free. There is risk associated with it. But you actually start from a business case and you're asking yourself, can we actually either save meaningful amount of dollars or have an opportunity to create a meaningful revenue? And this is what I think that a lot of participants in this space have forgotten to do, and I don't think that it's unique to this industry.
I mean, I 100% agree. What I would add is once you have an idea that there is a business case and that you can get sponsorship from the people that make the decisions, the next most important thing is to start, just actually start, and also start small. It's very easy to get tempted into trying to solve a much bigger problem than what you're actually needing to solve and what's in front of you, because the opportunity might seem bigger, maybe the revenue opportunity seems bigger, but bigger problems are just harder to tackle. And my experience of actually rolling out products in blockchain is being very, very precise on the specific problem that you're looking to solve in the smallest way possible with the smallest set of motivated participants, and actually get something out there, because all of that involves so much work in and of itself, and there's so much learning that you get from that, that it's really just a very, very productive, rich experience. But the other thing is, once you have something out there, you invariably start to see things that you didn't know existed before, or you didn't see before. I mean, so this platform that we have around tokenization, we started out by introducing a new product called an intraday repo, which essentially allows our clients to borrow funds on a secured basis intraday, which is not a product that actually exists anywhere in the market today. And again, it's something that I think is uniquely enabled by blockchain. But this idea of providing finance in this new way has actually opened up new ways, additional ways that we can now provide finance to these clients that we hadn't actually seen before. And the revenue opportunity for these new ways is even bigger than what we had originally kind of anticipated. We would never have got there if we didn't just start and we didn't just try and solve the problem. So I think that 0 to 1 idea is really important, and being able to execute it on it very clearly.
Thank you. And I think staying with that, I mean, is the wider financial sector really ready to embrace the new business model?
I think yes, but it has to make sense, right? Yeah. I think people recognize that the way that things work today is, not exactly the most efficient, and also that there are new business models that can be created specifically with blockchain technology. But, going back to the point around the business case, if it doesn't make sense and it can't be prioritized internally against other projects, because there are always, 500 other projects that people are trying to execute on, then it's really difficult. But again, I think that the collective industry making progress and putting new platforms out there, putting new projects out there, actually helps provide ammunition as to why people should be thinking about these new business models. So I think the answer is yes, but it's not like an open season. Yes, let's go and disrupt our business for no good reason. I think that disruption is part of business, but you really have to understand where you're going to get the new revenue from, and that opportunity does actually make sense and can be executed on.
Okay, perfect. And Yuval, would you agree? Do you think the wider financial sector is ready?
First of all, yes, because I think every one of the top 10 major dealers today are either using this technology in production, similar on the exchange space. So I think that, financial services were leading. Generally speaking, I would say that it's much easier to think about use cases that are financially related with respect to this technology. But we are working, for example, with 2 governments on nothing to do with financial use cases, but much more about programmability of mission-critical data, that it's important when the edge clients are consuming it, they are consuming the most up-to-date data. So it has nothing to do with financial services, has to do much more with defense. But I think that it is the financial services, because crypto is really what kind of pushed that idea. That's where it got started. So I think it was much easier to envision business models that are financially related, but I don't think that that's where we're going to see in 10 years all of the use cases exist.
That's interesting, thank you. Rob, can this new model be accepted as a way to create value by connecting with customers in new ways?
Absolutely. I think, the word transparency is everywhere these days, isn't it? We see it from investors, we see it from consumers, right? And there's a number of countries around the world that it's mandatory among your companies to start publishing statistics about sustainability and carbon footprint. And blockchain inherently has a lot of value proposition there and some unique abilities, and we're seeing this a lot more. It's also a way to showcase new and emerging companies, new protocols, new instruments, is demonstrating, look how efficient we are, right? And how we stack up against, these mature players. So I think there's some real ability in there. Increasingly, consumers want to know even more. They want to know where their product has come from. They want to know where it's lived along the journey. They want to know where companies have paid tax, which communities have you benefited, right? These extreme demands from consumers and investors, and unique abilities by blockchain to solve some of those issues. Heavy experimentation to get there, but really along the journey, there's something there. The other is maybe taking a different thought. Coming out of COVID, nobody has the same community they did 3 years ago, right? We're not integrated with products and services like we were 3 years ago. Many of us aren't living in the same place. So the whole concept of community is fresh in all of our heads. So particularly for consumer business, to the extent that you can enable something in your business differently with an NFT or with some smart contract and inherent programmability with the funds flow or some new amount of transparency, this enables consumers all over the world to just interact differently with that product and that service. So I think there's some things that maybe aren't tech heavy, but just because we're all thinking differently than we were a few years ago. So that's where we're seeing a lot more experimentation now, even among large enterprise, than we were prior to COVID.
Yeah, I mean, the one thing I'd add on this is that I think in the consumer space specifically, this is where blockchain will sort of fade a little bit into the background. So if you look at Reddit, they launched their digital collectibles product, as it were, which was wildly successful, but no one really knew that this was like an NFT under the hood. So I think you're going to see more of that, where blockchain technology will be used. These ideas that we talk about will be used, but for the everyday consumer, it will just look like a new thing from their favorite brand.
I totally agree with that, because again, I keep on coming back to the earlier question of what is the problem that you're trying to solve. And for the most part, the consumer doesn't really care about reconciliation. They just don't. I don't remember meeting one retail client who told me reconciliation is really making my life challenging. That being said, I do think that there is relationship to the end investor who is managing money for retail in large quantities, that having better transparency through the value chain will have a massive impact on their business. So even when you think about proxy, I mean, just think about today, who is managing 70% of equities in the world? It's funds. Yeah, those funds are, at the end of the day, ETFs are owned by retail customers, but the funds themselves are the ones that vote on behalf of their clients, which has been in the news quite a lot in 2022. So today, just like a small stat, to get an information about your cap table as an issuer, it's anywhere between 21 days to a month and a half. Like, that to me is a very long time. I always said, if you are a board of a company that is going through a hostile takeover, you don't know who's trying to do that until they took over, right? Which is a problem, right? And hedge funds and activist investors take advantage of that inefficiency. So I definitely think that there's a lot of opportunity within more of the B2B space to bring much more transparency in real time and change the relationship between an issuer and an end investor.
Thank you very much. Now, we've got 5 minutes left, and we've purposely saved this 5 minutes because I know you all have some really amazing questions you're just desperate to ask. So, who has a question for the panel?
No pressure for those amazing questions.
I'm sure there's one. Anyone brave enough?
I'm happy to ask a question. Tyrone, you mentioned public blockchain and would like to get kind of, one of the things that broker-dealers in the US are regulated is to have full control over assets that they own. I'll just take an example of Solana, not to pick up on Solana, that had downtime and those type of issues, and the fact that they don't control the infrastructure. So how do you think about, kind of, the evolution of public chains and regulated entities managing assets?
Yeah, so this is a really tricky one because, so if I think about our general thesis, and I think it might be consistent with most people here, long term, we see public blockchains being, the de facto place where you're going to have a lot of financial activity happen and settlement of those assets. Because it just makes sense to be able to use this sort of globally persistent infrastructure that is highly available and, always on. The challenge, of course, is some of the things that you've mentioned, but also even outside of that, things that you would typically expect within finance, like I can't see what your trades are as my competitor. Those privacy-related concerns are a problem, and so I think that we are going to have this sort of hybrid model for a while, where it's going to be permissioned environments that are completely controllable by regulated entities in compliance with their regulators. But hopefully with some sort of bridge into these public networks that allow for global settlement and easier movement of money and assets cross borders. That's the sort of, I think, a really great place to be. There's a lot that needs to happen before you get there. The other sort of thing to throw into that is, especially from an OCC regulated bank perspective, the OCC essentially issued a series of interpretive letters in 20 and 21, one of which sort of comes up with this new term called an independent node verification network, an INVN, which is basically a public blockchain. And from their perspective, they're not comfortable with banks actually utilizing these INVNs for the reasons that you specifically call out. And so we are going to have to get to this model where we can get regulators and also our clients comfortable with the fact that this infrastructure is not entirely controlled by us. One of the ways that we can actually sort of work through this right now is the assets, at least from JP Morgan's perspective, that we're creating on blockchain in and of themselves are not necessarily securities, right? They are representations of ownership interest in securities, and those securities are actually held in a regulated custody account or a broker-dealer account. And so all you effectively have is a books and records ledger of the ownership interest, but all of the regulations still apply to the offline systems that custodians hold. So there's ways of sort of like threading the needle right now, but ultimately long-term we do need to get to a better place, I would say.
I'm going to finish with a very, very quick last question. Are you optimistic about 2023? How are you feeling about the year?
Cautiously optimistic,
Okay.
I would say. I mean, I'm very positive on the technology in general. As I said, I've been doing this for a while. I fundamentally believe in the use cases that we're tackling and that we're seeing. The unknown here is really how long regulators are going to take to become comfortable, and we will all do our job, especially everyone in the room here, to help move that forward. And I think once we do, I think there's going to be a whole new wave of exciting projects. So.
I'm optimistic about the building. To me, 23 is all about people building new stuff. I'm not sure that we're going to see these tremendous impactful launches. To your point, there's some things that are going to slow us down a bit, but the amount of really thoughtful build going on this year is fantastic. And it's from the largest enterprise on the planet, and still the innovators are full throttle, which I think is super exciting, right? And they're coming together. That's the coolest part. We're seeing a convergence among those two ends of the spectrum.
I'm extremely optimistic, mainly because I know of a few things that are going to happen already in 2023. So unless something really meaningful happened to prevent those, I'm extremely optimistic about a few things that will happen in 2023. My biggest concern beyond regulation is it's kind of unclear where the economy is going right now. And at the end of the day, the first thing that a CEO and a board does when things are uncertain is focus on the things that give you certainty. At the end of the day, innovation gets hurt. So to me, that's my biggest unknown right now. We still haven't seen signs, at least from our activities with clients, of those activities being challenged. But we are seeing already signs in the industry, and we also know that a lot of organizations are slow to move. So I'm still waiting to see how that plays out in 2023.
Wonderful, thank you. Well, I'm very happy to end on an extremely optimistic note. So thank you so much to the panel. That was a really wonderful discussion. I know you're saving all those questions because we've got lots of panels coming up today. So big thank you to the panel, thank you.